The state of cybersecurity is at the tipping point. This was evident in the numerous issues explored at the second meeting of the Commission on Enhancing National Cybersecurity on May 16, 2016, at New York University School of Law. The session focused on the finance sector, cyber insurance, and research and development. An important indicator of the lack of progress in cybersecurity is that cybersecurity vendors, including insurance companies, continue to sell the problem, not the solution, because there are no proven solutions or consensus on cyber standards. The sentiment from the financial sector is that it is unclear what the government role is in preventing attacks. Government initiatives ignore anticipation and avoidance, are insufficiently forward-leaning on information sharing, persistently withhold the incentive of indemnification needed by industry to fully participate in information sharing, and do not meet the needs of top-tier banking institutions in limiting financial stress associated with ensuring the daily market opening. In particular, there are acknowledged weaknesses in payment and clearing systems and their attendant cascade triggers. The NIST cybersecurity framework provides the financial sector with a faux safe harbor as its adoption facilitates an arguable level of confidence useful in regulation, compliance, and insurance underwriting tied to security products, but whose framework of processes do not add value in enhancing resilience and prevention beyond the state of cybersecurity endemic to a financial sector calling for secure products. The prerequisites for a profitable cyber insurance market are not in place. Both information sharing and after-action forensic reports depend on industry indemnification, not yet in place. Cyber standards depend on a unified theory and practice of cybersecurity, not yet present. Instead of addressing these prerequisites, we hear assertions that we are all in this together. Cyber insurance can lower risk over time, and incentives are needed. In reality, cyber insurance liability is at a tipping point, with a $2 billion loss potential in the courts. Hope is not a strategy for either the insurer or the insured. Without industry indemnification to enable sharing and a unified cyber theory to buttress standards, a cyber insurance market is not viable. While hope is not a strategy, where do we stand with respect to innovation and research and development? First, we have to acknowledge that the requirement for trust is absolute in the banking and finance sector, and that operating in the presence of bad actors is a given. Meeting this challenge calls for secure data sharing. Blockchain was offered as a solution, but is it? Blockchain is the underlying technology of Bitcoin and is considered an essential tool, both trusted and secure. Here, all data is encrypted, despite the objections from law enforcement and the looming prospect that quantum computing will soon be able to crack any encryption scheme. Then there is the consumer space, where there is no appetite for changing what exists today. Beyond that, what cascade triggers are lurking below the surface of this new technology? Faced with low demand, stiff resistance from law enforcement, and rapidly advancing computer technology, blockchain appears to be a strategy based on hope. The White House Cyber Commission finds itself struggling with the financial sector mired in complexity and cascade triggers, a cyber insurance market unrealistically attempting to leapfrog unforgiving prerequisites associated with sharing and standards, and uncooperative research and development realities.